All right, welcome to the second half of our program. Hope you enjoyed the film, and at least you got some information that will explain something about the national retail sales tax to you. We're not telling you that you can to support this. We're just giving you information so that you can make up your mind. Now, let me go ahead and introduce to you our special guest from the Citizens for an Alternative Tax System, Mr. Dick Backert. He's a member of the National Board of Directors of the CATS organization. He's also the editor of their newspaper, the Cattails, it's entitled. Dick, welcome to our program.
Thank you, David. Good to be here.
Well, it's good to have you here. Now, so much has been spoken of recently in light of the Forbes campaign.
It's been a hot topic.
Oh, yeah. Tax reform, tax reform, tax reform, but so much it seems that a lot of that tax reform that they're talking about, a lot of people with the flat tax, is really some more of the same. We've already seen what we're proposing, what your organization is proposing. What is the sharpest contrast between the two proposals?
The flat tax, the Army proposal, Dick Army proposal, deletes an important word, and that word is income. It is still a flat income tax, and by virtue of that, a direct tax on people, a tax of the sort the Founding Fathers attempted in their wisdom to prevent us from ever having in this country. The national retail sales tax is not a tax on people, although all taxes are paid by people. It is a tax on things people do and things people buy. It is an indirect tax on that basis. The major distinction between our two proposals, and one I think that Americans ought to bear down on, is our proposal, the national retail sales tax, comports more closely with the original intent of the Constitution and the Founding Fathers of this country. I think that after 220 years, it might be time to think in terms of getting back to those first principles. The one point I try to make to people is, are we better off or worse off today now that we seem to have cast aside most of our constitutional principles? And the answer I keep coming back with after looking at the numbers is we're worse off.
All right, so now, when we talk about a retail sales tax, we are talking about a, quote, final point of sale, a retail item.
Final point of consumption of a good or a service, right?
Okay, so now let me ask you. My wife and I operate a business on the side. We're breeding horses. Mm-hmm. Now, we have a bunch of costs that are involved with that breeding horses. What happens to my cost of doing business?
I know where you're going. Business inputs would not be taxed. Yeah, that is under the current income tax system. Business costs, direct related expenses in the operation of a business, raw materials inputs, labor inputs, and the rest of it are not normally taxed items. They would not be taxed under the national retail sales tax either.
All right, but now if I continue to use, as I am now, a professional stable to hold my horses, they're providing a service. Isn't that service going to be taxed?
There would be, yes. There would probably be some. Let me point out here, Dave. We can't deal in the 14 minutes or so we had available to us all of the nuances and aspects of this program. I would simply encourage the folks who have questions, and I would hope there'd be many questions. The more questions we ask, the more effectively we can deal with them up front before we get this thing cast in stone down the road. Mm-hmm. And we've got a 1-800 number for that, which I hope you'll get out. But there are all sorts of little nuance type questions that are going to have to be resolved before this thing becomes final law.
All right. One of the major criticisms of the Ford's proposal was that he was going to tax the working income earned from as a direct result of labor. Right. But he wasn't going to tax income derived from tax bonds.
That was incorrect. That was used by his opponents. What his opponents refused to acknowledge is that they know, as most of us who think about it and study it know, that the dividends distributions from corporations have already been taxed by the corporate tax on that business entity. Mm-hmm. So they are already taxed once, and when the recipient gets the dividends or the disbursement from the corporation, they're taxed again. That's double taxation. Mm-hmm. I thought that was something America was supposed to be, against. I didn't think America was founded on that basis. So those who receive what is called passive or unearned income, whatever that is, mm-hmm. because they're putting capital at risk, they're certainly earning the interest and should not be double taxed on it. They're being taxed. They're paying a tax on that. It's just taxed before they get the money.
I think Mr. Forbes made that point several times on national television
He
programs.
tried to, right.
Meet the press,
Yes.
and so on. But still, if today, under the national retail sales tax, if I go out and buy 1,000 shares of IBM, do I have to pay a sales tax on that?
The normal investment transactions, you see, under this program, we're trying to encourage investment activity. We're trying to encourage savings. Our savings rate in this country is around 2% something. The Japanese, the Europeans are in the 15–17% range. That's why business and growth is so slow in this country. We don't have the capital pool. We're borrowing our money from our foreign competitors at this point. The national sales tax, by not taxing savings and investment instruments, would encourage that activity. It's an old saying, and libertarians understand it, you get less of that which you tax. Well, under the current system, the income tax, we obviously don't want savings and investment because we tax the daylights out of it.
Still, if I go out and buy stock, you're telling me I pay no tax on that purchase of stock. If there's a broker's commission that's involved in buying the stock, is there a sales tax on that?
There would probably be, because he is providing a service, there would be a tax on it. Okay. There would be a transaction tax.
Well, that's important because so many people feel that they're not really involved in the market, and yet I'm a federal employee myself, and the major tenet of my retirement is based upon a 401 plan.
And let me tell you something else. They talk about the wealthy investors in this country. Do you know who owns most of the stock in this country? It's teacher and other private and quasi-private and public pension funds.
All right, now here's something that was just barely touched upon in the film we saw just a little bit ago. Talk about NAFTA, and they talked about GATT. Now, under those two treaties, we can't arbitrarily tax imports, as I understand. Right. So right now, when a country brings its goods into this country, in essence, they're operating tax-free. So our producers are certainly operating at a great disadvantage.
Indeed. The retail sales tax, the national retail sales tax would be what they call GATT legal. By that I mean it would allow under the terms of the General Agreement on Tariffs and Trades, it would allow the American producers to send their goods abroad without the cost of our government embedded in them. That is not the case now. It's estimated as something like 14 to 20%. I think the tape pointed out 14% of the cost of the first loaf of bread or the first gallon of milk that poor person buys at the supermarket today has embedded within it a 14% tax compliance and direct corporate tax cost. Under GATT, that cannot be removed. If we're exporting tires, there's 14% of our governmental cost in that tire. It can't be taken out under the terms of the current GATT treaty. Under the national retail sales tax, it would never get into the product stream, cost stream in the first place. It would never get in.
So then a manufacturer, Ford Motor Company, wants to sell its Ford Contours, send them abroad to France. Right. Currently, let's say you're a $15,000 automobile. Let's assume that 14% of that is, using your figures, or taxes. Well, we could subtract 14% of that. So we could ship that thing over there for a cost, I guess, of what is it? I don't know, about $1,700. So instead of $15,000, it'd be about $13,300. It'd be much more competitive.
And coming back the other way, the Japanese or whoever's sending whatever products in here, the cost of our government is added back into their price at the time that the consumer purchases it off the showroom floor or wherever.
Well, I guess that sounds sort of wonderful.
And the thing we need to think about, we'd better stimulate foreign trade. I think the number I've heard is we literally, to survive as an economy, we have to export something like 20 or 25% of what we produce and about 30% of what we grow. If we don't do that, we will stop functioning as a viable economy. The other number to remember is that for every $1 billion of foreign trade we stimulate, export, another 19,000 to 20,000 jobs are created here.
All right. Now, currently, this proposal, national retail sales tax, is currently under consideration in Congress and the House.
Just introduced on the 7th of March at a very well-attended and well-received news conference in Washington, D.C. The bill number, it's H.R. 3039. And I would encourage your listeners or your viewers to please get in touch with their congressperson and encourage that they co-sponsor the bill and support it.
Let me say that I've already done that. I contacted Sanford Bishop's office in Washington, and I said, how about give me a copy of that bill? And I haven't received it yet. It's been well over a week. Hope
they've been printing the president's budget. They've been busy.
Well, it's not many pages to it.
Right.
Let me ask another criticism of the national retail sales tax. and that is, jeepers, if we do this, there's going to be no deduction for home interest, no deduction for local property and state sales taxes. This is going to really hurt the value of my home.
Not so. There was some original conversation about that, but frankly, the interest rates in this country, it's estimated they would drop about 2 percentage points. Now, if you think about how 2 percentage point interest rate refi rate would help your home mortgage, anybody's home mortgage, it's considerably more than that. Only 25% of the people in this country, as of 1991, I think it was, applied or took credit for the home mortgage interest deduction going in anyway. So either a lot of people aren't applying for it, but the average home mortgage interest deduction only puts about $2,500 in the average homeowner's pocket. You're only getting a portion of that money back. If you save 2 percentage points on the interest rate, you're talking about a great deal more money.
And you have to have a fairly good sized mortgage if you have no other deductions, because under the current tax law, you don't really have much.
And this also goes to the whole matter of social engineering. I mean, I thought we were supposed to operate on a free, fair market here. There's a lot of, the tax code as it currently exists, all 10,000 lovely pages of it, is not so much for collecting revenue by the federal government. It's for social engineering and human behavior control. If all they want to do is raise tax, there are lots less complicated ways to do it. Could I give the 1-800 number?
Sure, go ahead.
Yeah, the number for those of you who would like additional information, and there's a great deal more to learn about this subject, the CAT's national office is 1-800-767-7577. No obligation. Give them a call. They'll send you information. We're not asking anybody to accept this on blind faith. Study the issue, make sure you understand it, and then take whatever action you feel is appropriate.
Okay, I just said a little bit ago that I breed horses. If there's anything in the world that's going to tag you for an audit, you're going to put down that you have a business and that you breed horses.
That's right.
Let's point this out. This plan will get rid of the I.R.S.
The I.R.S. would shrink to a mere shadow of its former self, or go away entirely, and any collection activities, overhanging audits, that sort of thing, in any transition period would be handled by a separate department of the Treasury under the directly under the Treasury Secretary.
So I don't have to worry about audits.
Right.
I don't have to
April 15th becomes just another beautiful spring day.
I don't have to file any taxes.
Nope.
I don't have to go and start writing checks for $150 and up for my CPA.
No more fear of approaching the mailbox that there may be that eagle emblazoned envelope awaiting you.
You're almost talking about a real revolution, a Declaration of Independence again for the American people.
It is a revolution, David, no question about it. And let me tell you who we have as an ally. One of the staunchest allies we have in Washington is Mr. Bill Archer, a representative from Texas, chairman of the House Ways and Means Committee. That used to be Danny Rostenkowski's job. Bill Archer, when he ran for election last time, said that his goal before leaving Congress would be to, quote, tear the income tax out by the roots and throw it by the side of the road so that it can never harm the American people again, close quote. That's pretty strong support, and he's chairman of the Tax Writing Ways and Means Committee.
If anything in the world sounds good to me, it's getting rid of the I.R.S. Give us that 1-800 number again.
1-800-767-7577.
Well, folks, you now know a little bit of information about the National Retail Sales Tax. You now know the number that you can call to get more information. Check it out. Decide for yourselves. Thanks for watching our program today, and we'll see you next time.
United we stand, America. Let truth